Let's find out some stock-specific strategies as well then. And Kunal, since you're saying that there's no decisive trend on the downside right now, what would be your strategy in terms of individual stocks?
So I'll go with a few mid-cap names in terms of long calls. The first one is Bector Foods. That stock is making a comeback again after a recovery, after a correction of more than 15% from the recent swing highs in the month of July, August. The stock is trying to make a comeback. It's almost like a V-shaped recovery for the stock on the very near-term charts. The stock breaking past about that 1050 mark yesterday. Would look out for targets of 1100, stop loss to be kept at 1050, 1025. And the second one which would be looking at as a buy call would be IPCA Labs. That stock is forming actually a bullish flag formation on the daily charts. 935, 940 is the breakout point. Would look out for a target of 970, stop loss 924.
Right. Nooresh, what about your stock-specific ideas?
So first would be a buy on IndusInd Bank. Although the stock has not broken out yet, but in the last few days has been showing a lot of relative strength. Not correcting much, getting tighter and tighter into this range of 1390, 1370 on the downside, 1470 on the upside. So the range has contracted and eventually they should break out. And the first indications is by showing a lot of relative strength, even when the markets are correcting, seeing gap downs. So out there expecting an eventual breakout of 1470 and a move into a new trend. So a buy at current level, stop loss at 1390, an initial target price of 1550. Second is a buy on Power Grid or defensive stock, which has again been showing relative strength. 190, 195 is a strong support. 205 is the point of breakout. Expecting this to slowly and steadily move up, and a good defensive player. Stop loss at 190, target price of 210.
All right, that's the view coming in from our chartists talking about some of their top recommendations and what they're advocating. But let's nail it down to stock-specific calls then and discuss the pharma sector in greater detail as well as Adani Ports. Anisha is here to break it down for us. Anisha, let's begin with Macquarie's view then on the entire pharma sector. What exactly is the view on individual names?
Well, I think they're following the momentum that we have seen in the market. So they've upgraded the target price across the board, and it's a sizable upgrade coming in for all of the counters that they have under coverage, the likes of Aurobindo, Cipla, Lupin, IPCA, Sun Pharma. So a lot of these names wherein they have upgraded the target prices quite materially. Now the thesis behind that is the fact that they expect that the US market is likely to perform better. A couple of reasons for that. First up, in terms of the small manufacturers, they are saying that the competition from them has actually reduced given the fact that interest rates have been on the higher end. A lot of these small generic competitors haven't been able to catch up to the kind of demand that we have seen in the US. So there's less competition. In fact, they are going ahead and saying that it's the first time in almost a decade that the competition has actually come down. As a result of that, the pricing power for the Indian makers actually improves. We have seen there has been consistent price erosion when it comes to the US market, but then now there are early signs emerging that the price erosion might be stabilizing. So that's the other factor that they're watching out for. Of course, in terms of the approval rate of the drugs as well as the approval rate of the facilities of the Indian manufacturers, that too has been on an uptrend, and that supports the argument as well. But